Your results are out today. What are the key points that you would highlight?
Well, you know, the first thing that I should say on a personal note is this week is my 6-month anniversary with RSA. It's been a really busy time, and what I can say on a personal basis is everything that I thought this company can be, I think today, knowing much more about it. I believe that we can be one of the world's most successful, most valuable international general insurers, and I think that we've made a good start in hitting that future target. We can see some of this in the results that we've announced today, although of course only 5 months after we announced the action plan for RSA, this is a very preliminary indication of what we're up to. The results, I think I would describe against our action plan, which has 3 components. The first is that we need RSA to be more focused strategically on our biggest businesses and the things we do best. We've made very good progress against that goal. Essentially, it means disposing of businesses that lie outside our core areas, and we have already in just 5 months raised more than £600 million, twice as much as we thought we'd raise in the whole year in disposals, and got a number of key disposals done earlier than we expected. So I think we're on course to getting the strategic shape of the company we want. The second thing that we needed to do with RSA was to fix the balance sheet, both in terms of the amount of capital we have, in terms of the quality of what sits on it, in terms of people's confidence and understanding. Done a lot in 5 months in that regard. Our rights issue went tremendously well. We're very grateful to our shareholders for supporting it. The disposal prices being higher than we had hoped for has also helped us in that regard. So our capital has now got back to much more desirable levels, and indeed Standard & Poor's reaffirmed actually upgraded our rating, having downgraded it and reaffirmed it at an A category. So we're feeling much better about that. It is always the case in turnaround situations that immediately after problems have been uncovered, the clean-up job takes a bit longer, costs a bit more than you first hope. This happens all the time. And that's true in our results in the first half. But because of the extra money that we've made through disposals, it doesn't show through. So the key thing in our third category of how well is the company doing, how well are we performing underneath the strategy and the capital, we've returned to profit straight away. So after a very wrenching loss last year, we're back in profit in the first half. Now the profit is modest because we've taken a bunch of clean-up charges inside it, and because we're only starting on the journey to make this company much more operationally stronger. But that's an important start. And when we look underneath the cover of our businesses, we can see the different ingredients that make up our action plan operationally, all going well.
So how do these results today fit with your expectations?
If you unpick the first half results, talking in profitability terms, what are the key themes? The best indicator, I think, for the ongoing health of our business can be seen on 2 lines. First of all, our income, the business we do with customers. Now, our income is down something like 3% on an underlying basis, 9% on a constant currency basis, which is more or less in line with what we thought. Why is it down? It's down because we are re-underwriting parts of our business to strengthen their profitability and to make sure that we do just the business that we can be good at. And so on the income line, we're seeing high levels of customer retention. We're seeing nothing in our franchise health that should make us worry about the future for RSA, but we are, of course, pulling our horns in a bit to write more profitable business. In terms of current year profit is up on the first half of last year. Again, a key trend, because that's the one, if you like, that you can project into the future, and that's the one that should be showing early results of our improvement in pricing and underwriting disciplines. Now, when we get beneath that, we've taken some clean-up charges. So in our underwriting results, thick end of £100 million of reserve strengthening. I don't think that will be recurring, but that are, if you like, a hangover from the past. And also so-called below the line, we've written off some goodwill in Ireland. We've got more losses in Ireland, which will come to an end soon, I believe, and so on. So the bottom line is a profit, a modest one. Within that, encouraging current year trends and some clean-up costs.